Right, so I got stopped out of all the positions I had yesterday, or the ones I started yesterday. I will get stopped out of a bunch of additional things today. I haven't had this little exposure this year. This is the least amount of exposure I've had to the market whole year. I've been kind of heavily invested on the long side since pretty much late December, and the lack of setups and the fact that I've been getting stopped out of a lot of things, let's see here, has led me to have almost no exposure. I think I'm a bit less than 10% invested right now, and all of the positions I have are really small. They're either small to begin with or they're partials. So we'll see where this market goes. I mean, it's really weak now, and I'm thinking about buying some UVXY in case the bottom falls off. Let's see here, UVXY is on my long watch list. I'll put it here right away. I may even buy some right here pre-market just to get some exposure. I'm just trying to set up my trading windows on my notebook. I'll go through yesterday's trades in about an hour or so when things calm down. I took some screenshots of my brokers. Don't you watch more time frames for less than 1 hour? I do on some stocks near the open, like the first 10-15 minutes. I sometimes look at the 1 and the 5 minute charts. But after the first half hour, I usually only watch the hourly chart and the daily chart. Or if it's some kind of on special occasions, I may look at the like 5 minute chart the whole day. Usually when there's a big stock, like a big runner, I'm looking for short. Let's say, like, this is one example, like HMNY a couple of years ago. You know, a scenario like this, when I'm stalking something that's run up a lot, that's when I look at the intraday chart, like the 5 minute and 1 minute the whole day. But usually that doesn't happen a lot. Let's look at my long watch list. Quick, see, the market is gapping down, so there's not gonna be a lot of things to look at for me except UVXY on the long side. I'm watching this Ulta, but I want it to extend more. I want it to extend another day to like 280 or something. I don't think there's a great setup here yet for a short, intraday short. And this drip too, it's a triple bear oil ETF. It's up 73% in 2 weeks or so. I don't know, not excited about it yet. I'm just gonna put in some stops on my current positions. Let's see, what's the 3309? Okay, so now I have stop set in because I think a bunch of these will stop me out right out of the gate. Let's see, where's UVXY right now? Okay, all right. Yeah, I'm gonna buy some right here with a like 28.35 stop or something. Just a starter, nothing crazy, you know, in case. I mean, if you look at the, I don't know, I'm not super bearish or anything. I'm just taking a shot. Like, I'm not gonna risk a lot on this trade because there's still a lot of support in the major indices. I don't think they're gonna waterfall like they did like November, December last year or something like that. But I'll do small just in case. Right, I did small 8,000 shares. And on like opening range highs, and if I see a good setup, I'll probably add more, but we'll see for now. Yeah, I'm gonna add it to my long watches just so I don't forget to keep track. USLV, this one too. Partly why I like this gold and silver ETFs, because gold has taken out a long range. You know, look at this. This is like, what, 5, 6, 7 years or something, and now it had a leg up, and now it's just consolidating. I think in a few weeks or something we may have another leg up. And this nugget, this one makes big moves. You know, if gold goes up 5%, this thing goes up 50% or 100%. So that's the power of a triple ETF. You know, I caught a 200% move earlier this year, or 170% move or so from my initial buy down here. So again, I overstayed, unfortunately, and now it's been very choppy past few weeks, but I don't want to miss another leg up if it gets one. So I just want to stock these. This thing has some news, and this one I'm tracking for other purposes. Let's see here. All right, let's look. Let's look at the opening range highs here. So now it's building its first 1 minute candle. All right, 29.14. All right, so now the first candle has been established. 29.14 is the high. Okay, it looks like I got stopped in some now. So I'm long 20,000 of this thing now. I bought 8,000 pre-market and I put another 12,000 now. I'll put a stop for those 12,000 at 28.91. See if we can get going on this thing. It's a very tight stop, so you know I'm risking what, 20 cents or so with slippage. It's not, and it's a small position, so I'm just going for a lottery ticket kind of a trade here in case it does something like this, like it did back in July. It went up 40% in a few days. I mean, why can't it do that? I don't know. If you look at the 60-minute chart, in case we pull back a little bit more in the indices, because they do look weak, very weak. Okay, so this one I got stopped out of. This thing, I've been in this thing for like 6 months and I finally got stopped out. Okay, got stopped out of this one also. Let's see here, 24. Another tiny position I got stopped out of, like really tiny. Let's see here. Wow, I'm not used to having this little exposure. I mean, I'm used to the whole year I've had like 15, 20 positions, mostly long, but also some short. And now I have barely anything left. You know what? I'm gonna sell this thing, even though it hasn't hit my stop yet, because it's gonna hit my stop. It's just, market is just too weak. All right, so I sold this one too for break even. I bought it like 3-4 days ago on this little breakout of the flag on this little 60-minute candle. So just about break even on this thing. All right, UVXY is going higher at least. Let's see, questions. Did you sell some of the positions before being stopped out? Do you mean yesterday's positions or the ones I've been, the older ones? Yesterday's positions I got stopped out with full size because they didn't go up enough for me to sell, like Mealy and a few others. But the ones I've been in for long, like EMPH, I bought it here back in April. Yeah, I've been scaling out of this thing the way up, all the way up. So I only had maybe a third or a quarter left. And this BW also, you know, I think I bought it here some 380s or something, 390s. Yeah, and it ran up like 35%, and I sold some on the way up. Let's see, long-term longs, like, yeah, I've been for the past month or so, I've been getting stopped out of position after position. Another one I got stopped out like a month ago, like TTD. I bought it. I think I bought it somewhere here or maybe here, or I don't even remember. And then I just got stopped out. Like this has been happening to a lot of stocks. They've just been, you know, they've been hitting my trading stops. That's one way to tell the market internals are weak. You know, getting stopped out of position after position, and that new positions haven't been working. Let's see. Okay, so Ulta, now the setup is ruined, unfortunately. Drip, this thing is, oh, this things keep going. If it keeps going to like 9500 today, there may be a setup tomorrow. We'll see. A mean version setup. I'm looking for something like this where it goes up multiple days in a row and then has a red day. Look at like it had in late December or a few months back here. So that's what I'm looking for. I'm just, oh, what did I do now? Let's see, what is this? Okay, not a lot of stocks in my scans. Very few, which is not unexpected considering what the market is doing. And a lot of ETFs and bear, triple bear instruments that are up. But I do UVXY because it's, I think the ADR is very high, like 6 actually Twix has higher ADR, but Twix is lower price, so I don't want to buy a lot of shares, like cheaper with commissions, so it doesn't really matter. But yeah, VXX is like half of Twix ADR. Yeah, not much to do right now, at least for my type of trading. I'm looking for markets that are, you know, doing this and this, not doing this. This is not my type of, you know, obviously for a day trader it's always something to do, but for me, I'm just waiting it out. I'm gonna probably, you know, in 40 minutes, 50 minutes, I'm gonna, you know, close the stream and do something else the rest of the day, unless something exceptional happens in the markets, which I don't think it will, you know. But the big money in the markets is in the swings higher, in my opinion, or when there's extreme volatility, like late December, early January. That was also a great time. But right now we're in the middle ground. There's no upside momentum, and there's no extreme volatility. So there's really not much for me to do. Like extreme volatility, I'm talking about, you know, these triple ETFs, like when there's fear, panic, these triple ETFs going straight up and then straight down. That's where the big money is. But right now we're not there. But hopefully we'll be there a few weeks from now. That would be great. Get a flush out and hopefully maybe get a fourth quarter rally or something. If you look at the SPYs, I would love to get a flush below this 270 very soon. The sooner the better. And let's see here. What's your exit strategy for such long swings? How do you decide this? Okay, that's easy. Like, let's take an example. Roku. So I bought it here on the opening range highs. It gapped up on earnings, a huge volume, all the things I'm looking for. You know, long range break, had like a 6-7 month range break, and surprisingly good earnings, great growth, etc. All the things I look for. So what I usually do is when I put the stop on the lows of the day. On the day I buy, the stop is on the lows of the day, and then it goes up 10, 15, 20%. I sell some, maybe 15, 20%, a quarter of my position, and then I trail it. Then I just start trailing it. Like the first close below this purple line, that's the 10-day moving average. I'll sell maybe, say, a quarter or a third of what I still have left from after the shares I have left after the ones I sold into strength. And then I sell another third or quarter when the first close below the 20-day moving average, which is the yellow line. And then the next level is the red line, which is the 50-day, etc., etc. So that's how I scale out. So that's what I use these moving averages for. They're my stops pretty much. So I wait until end of day and I sell it. And then I also have a level. Let's just take an example, right? Then I also have a level where I sell no matter what. So let's say I bought it here, now we're here. So I sold some into strength, or let's say take this day here. So this day here, it closed below the 10-day and below the 20-day. But now imagine if this candle, so if it closes like this, I'll sell, like, according to my sell rules, a quarter or a third or whatever. It depends. It kind of depends. But if it would go, like, if there's some bad news or something and it would hit my stop here or wherever it may be, maybe it's here, or it would probably be here. I usually use the previous swing's lows as my stop. Then I would get out at 79.01. Even though it turns up intraday and closes above this yellow line, but I would have to stop, get stopped out, because I can't. Sometimes stocks, they can go down 20-50% in a day. Even mid and large cap names can do that sometimes. So if it hits my last resort stop, it hits my last resort stop. I just sell it. If that was helpful, those are my sell rules. Sell some into strength and I trail the rest. Let's see. Yeah, nothing on my scan still. What's UVI doing, by the way? Man, TC2000 is so slow near the open. Okay, it's still higher at least. Man, these scans. Come on, TC2000, work. This is some small biotech. It's a gold stock. Let's see. Fannie Mae. More volatility ETFs and triple ETFs going higher. All right. Wow, very unusual for me to have this few positions. Just two. I haven't had this little exposure since the markets tanked in fourth quarter last year. Like, I think I was pretty much all cash in December last year, and then I got heavily back in. For those of you guys who have been following me on Twitter, you remember I was tweeting like 1 or 2 days before we bottomed. I was tweeting that the markets, like the sentiment was more bearish than in 2008. And we weren't even down that much from the highs, like 20% for the SPYs and about 20 for, maybe 25 for NASDAQ, I think. Yeah. But for a swing trader, sell-offs are great. It's the best thing that can happen to swing trader. If you trade on the long side, because that's where the big opportunity is. The biggest swings, if you just look, you can go like in TC2000, look at the Dow Jones chart. Go back 100 years. The biggest swings start after the market has gone down every single time. This is the quarterly chart, but you can look at the daily chart, like for the SPYs or Russell or NASDAQ or whatever. The biggest moves happen when the market has gone down. Now the key is getting in when the next swing up starts. So that's the hard part, obviously, because you can buy into a bear market rally and then everything goes back down. So that's the hard part. This is why the second leg higher or an undercut of a previous low or whatever, those are much safer than getting in on the first leg down, like we had in January last year. the markets went straight up for a few months, then it tanked, and then it had this little bear market rally. But now in hindsight, this was a nice rally, but I was too afraid to buy it because it was the first leg down. Meanwhile, back in December when I started buying and early January, we had like one washout, second washout, then we had a third washout. So it was a third leg down. And you always want several legs down. UXY, what's this one doing? Okay, it's turning back down a little bit. HC, there's no volume in this thing, so the news can't be very significant. It was gapping up in after hours, that's why I put it on watch list. Had some patent news against Google or something, I don't know. Yeah, most of the positions I sold, I got stopped out of, are a little bit lower. We'll see what happens. Just a waiting game. If you want to make money in the markets, you gotta wait. You gotta have patience. Wait for your setups. Even if you're a day trader, because you don't get good setups all the time. Mostly like the first hour or two after the open, and then the rest of the day it's usually kind of slow. Oh, by the way, let's see, wait, I'm gonna do something here. One sec. I'm gonna show you the screenshot I took of my portfolio yesterday. Let's see. Here we are again. Here. So this is 10 I got stopped out of, Melee and Mankind. This Roku was a fat finger trade. I thought I was putting in a stop on Melee, but I put in the wrong ticker. And now I have been stopped out of this JWN RLGY, and I still have a tiny position in these apps that I've had for about 5 or 6 months. In my third account, which is by far the smallest account. It's just a really tiny position. I don't really care about this, but yeah, it loses this 579 or whatever. I'm getting stopped out of this one too. So I only own this and UVXY at the moment. Very unusual for me to have such low exposure. It doesn't happen very often, but that's the way it is. Maybe it's the wrong time to start a trading stream when there's nothing going on, for me at least. Yeah. So if you have any, let's see, is it dumb to swing with low capital? I mean, well, I don't think it's ever dumb to start trading. I mean, you mean versus like day trading? Is your question like, should you be doing day trading or swing trading? I guess that's what your question is. I think, like, I started as a day trader, but I think you learn faster as a day trader because you do more trades and you get more signals. So your learning curve is generally faster, and then you start. That's what I did, at least. Then I started like increasing my time frames. Started in the beginning I held for like a few hours. Then I started holding things for a whole day. Then I started overnighting things. Then I started, 3 to 5 day swing trades, and I started holding them for a few weeks, for a few months. Now I sometimes hold things for several quarters. That was my process. But I mean, it depends on how low your capital is. Like, I don't generally recommend anyone to start trading if you only have a few $1,000. That's a little bit too small, I think. The least amount I've traded with or started trading with was like 3,000 or 4,000, I think. Even though I had as little as $1,000 in my account at one time after I blew up the first time I started trading. But I mean, you have to find something that works for you. If you're a working person, like if you can only watch the markets like near the open and just check in couple of times during the day, I think swing trading is better. If you don't want to put in, like, if you can't sit here full time and look at charts and the markets, then swing trading is great. But I would recommend, if you're gonna swing trade, I don't recommend you doing like longer term, like several weeks or general month holds, because you will trade very little, and you will sometimes you will have to be and sit there for months, and because you can't swing trade, at least not on the long side, when a market does something like this. There's no setups or very minimal amount of setups. So I would recommend doing like 2-3 day holds, 4 day holds, because then you can catch these smaller swings too in the markets and still, you know, cash out before they drop. You will get in more trades. That I think it's very important to do a lot of trades without over trading to get a shorter learning curve. Because if you only get like, say, you know, there's a big difference in getting 5 signals per day versus getting 5 signals per week. You know, you're gonna, at least if you follow your rules and, you know, get stopped out and all the buying and selling rules and position sizing rules, as long as you follow rules and good trading habits, your learning curve will be faster. So it's entirely up to you if you want to start swing trading with low capital, or trading at all with low capital. Well, UXY is strong. That's great. So my average is 2906. So my average is down here, and I have 20,000 shares. And I'm thinking about putting all of my shares under this stop level and removing this one, because there's no reason to hold it down here if it starts tanking. Yeah, I'm gonna put stop loss for all shares at 28.91. This thing I'm watching, it's been going down for like 1, 2, 3, 4, 5, 6 days in a row pretty much, except for this day. I think, you know, if it can go down to like 950 or 9 or something, have another big down day, it could be a nice mean reversal setup here. Nothing I'm excited about. It's kind of thin stock and kind of low price, but there could be something here in a few days potentially. Hey guys, could you write in chat how many years you've been trading? Could all of you write in chat how many years you've been trading? I would love to know. 3 years part-time trading. All right. Anyone else? 4 years? 5? 1. 4 years. 3, 5, 0. Been trading for 7 years, part-time only. All right. So a lot of part-time traders. So are you usually like trading the open, or how do you guys do it? Yeah. I mean, like the first hour, that's when the most action is anyways. So if you're gonna day trade and be like get the most bang for your buck or for your time, that you should probably trade for like the first hour or 2 hours if you're day trading at least. Yeah. Buy stop limit orders set the night before. Okay. Open till afternoon. All right. Oh, Middle East. Oh, I thought you said in the Middle West. So okay, in the US. Okay, in the Middle East. All right. So it's about the same time zone as I am in Sweden, I guess. 6. Okay, so you're two hours before. It's 4 p.m. here. All right. It's kind of late close. But yeah, I guess if you're gonna trade, it's great to do it either. Be able to do it either before your job or after your job. Oh, UXY is holding up pretty well. Oh, drip started fading. I was hoping for a big setup in this thing, but looks like I may not be getting it. Like these types of things are great to trade intraday because they have such big range. Like the average daily range is 10.7%. Like there's so much range in this thing. Everything's starting to correlate. Yeah, I mean, when things go down like this, yeah, absolutely, things are starting to correlate. Because when markets go down, usually most things go down. Most of the time, at least. And especially when you get panic, that's where the correlations get really, really high. We are not really there yet, but if you look at like my watch list, well, there's a few green things, but all right. So 28 out of 207 names are up on the day. The rest are down on the day. So yeah, I see lots of notes on some of your shorts. Are you spending much time researching companies? Well, not like if you look at something like this. I usually, track the earnings and PRs. Like if they gap up on some news, I usually like to put a note on the chart. But it's not like I'm reading filings or something like that. I'm not reading the income statement on balance sheet. I use MarketSmith to look at the earnings. I'm gonna show you guys. This is a tool I use a lot. Let's see if I can get it working. Mostly during earnings season. Right now it's let's see where the earnings season starts. Right now there haven't been much earnings the past like month or so. Let's see, quarterly chart. So the earnings season starts in about 2-3 weeks. So this week starts a little bit, and then this week will be very heavy. So end of October, early November. So that's when I'll be using this thing a lot. Let's look at some stocks. Roku, because in this tool you can see like the estimates for next year and the year after sometimes also. And you can see the past 2 years or the past 8 quarters of earnings and revenue growth. So Roku, they have negative, they're losing money, but let's take something like, I don't know, Apple. This is a cash machine, they're making money. So you can see like the growth. As you can see, the growth has been decelerating, and also revenue growth has been decelerating in the past 2 years. You can see like next year's analyst estimates, -2% EPS growth, or this year's actually, versus last year. And next year's is +9% versus this year, and P19. And you know, I track these things. I usually want the fastest growing stocks. They don't have to be profitable. A lot of them are losing money, but if the revenue growth is big, they can work really well too. Because if you study the biggest movers in the market, like things that go up for multiple years and make huge moves, they're all earnings driven most of the time, unless it's some tiny biotech that goes from like 10 million market cap to like 300 million. That's a 30 bagger, but no one bought it at 10 million. Like you can't even trade it. Let's look at stuff like Square. I have a lot of notes on this thing. Look at this move. Past few years. Look at this. 7 bagger. Earnings. Great earnings. Shopify. Same thing. Look at this thing. This is like an 18 bagger. Earnings. Apple. What is behind this move? Earnings, you know. This is where I look for long setups, strong growth stocks with great earnings, especially when they show resilience and relative strength compared to the market. Because then when a market has been in a correction for a while, these are the kinds of stocks that turn up. Now Apple is obviously not a growth stock anymore, like we just saw, but man, like yeah, like TTD, Roku, OLED, Shopify, Mercado Libre, Tandem. This thing has gone from 3 to 74 in a year. So it was a 20 bagger in a year. What drove it? I'm gonna show what drove it. This is what happened. Look at the revenue growth. You see this guy? You see the EPS? Like 2 years ago, they lost $3 per share. Look at this. They're losing less and less. They even had a tiny profitable quarter. This recent quarter, they almost broke even. Look at the revenue growth. They went from 27 million in sales to 93 million in sales, quarterly sales in 2 years. Look at analyst estimates. They lost like 27, 13 per share, $2.50 per share, 65 cents per share. This next year, they're estimated to lose 6 cents per share. You see a trend here? This is the reason this stock was a 20 bagger. It was just some obscure, forgotten, neglected micro cap stock. And then suddenly they had a big hit with their medical device, and every fund wants in. This is what happens with growth stocks. Let's see. Only day trade I got in today was Apple short for around 23, 220 to 93 after earlier around 221.70. All right. Oh, Apple short. Yeah, I don't do these kinds of setups, but so I can't really comment on it. But yeah, I mean these high-priced, ultra-liquid stocks, they great day trading vehicles. If you follow a guy, Dan Shep55 on Twitter, his name is Dan Shapiro. He has a trading room. He pretty much only trades like Tesla, Google, Amazon, and Apple? No, I don't think he trades much Apple anymore. But he trades like 4 or 5 stocks. That's like 90% of his trading. He just focuses on those stocks, and he has great results with it. But he focuses on these large and mega cap names that are liquid and have a lot of range. And those are great vehicles for day trading. And I used to do it too. But now I just, again, like I said yesterday, I can't scale my account day trading. If you have a multi-million-dollar account, it's very hard to scale it. I need to find big moves that I can hold for several weeks and months. Yeah, a lot of these recent runners that have gone up a lot over the past few years, they're just, starting to unwind. That's not a great sign for the market going forward. This actually looks like a small bear flag. See this? I wouldn't be surprised this thing goes to 250 in the next few weeks if the market keeps selling off. But again, I already have short side exposure with this UXY long. So if the market goes down, this thing goes up, especially if there's fear. But the problem with these triple volatility ETFs is, okay, let's say if the SPYs go down 5%, this thing could go up 20%. But the problem is, as soon as the SPYs start going sideways, this thing will start unwinding. Then let's say SPYs go down and then it goes sideways for a while, this thing could give back all of its move. So it's programmed to go to zero. If you look at let's look at the weekly chart over the past few years. Split adjusted, this thing was at 1.8 million in 2013. So it's programmed to go to zero. And they do these reverse splits, 110, 14, 15, 15, 15, 14, 15. Every year pretty much they do a reverse split because it goes to zero. So it's only a trading vehicle. Shorter term holds a few days usually. If you hold it long for longer than that, you're just paying for trouble. So this is what a lot of people do. They short this thing because they're guaranteed to go down over the long term. Problem is when something like this happens, like early last year, it goes up 200% in a week. And if you're short from here, you're down 150% on it or 200% on it in a few days. But if you can stamp the volatility and the borrow fees, over the long term, these things are usually, well, they're gonna go down, but question is if you can make money on it. I think the borrow fees eat all the potential profits up. I'm afraid of that. So I don't know how viable of a strategy it is. And also you need to have a big account and only put a small portion of it in this thing just to survive the volatility. Let's see here. Can you repeat the scaling account on day trading part? I don't know what you are referring to. The scaling account on day. It's hard. It's easier to day trade if you have a small account and meaningful returns. Let's say if you have a 10,000 or 100,000 or $500,000 account, it's easier to make let's say it's easier to double your money in a year than if you have a bigger account of several million. How long did it take you to earn your first million from trading? How did you do it? What process? Okay, I'm gonna show you something. I'm gonna show you guys. That's a good question. I'm gonna show you something. I'm gonna show you a chart over my trading process. So, see here. One sec, your screens are gonna go dark for a sec. Let's see here. So I'm gonna show you something. Here we go. Let's see. So this is, so I started tracking my performance early 2014. Before I started trading summer, or spring 2011. One second. And I started trading consistently my performance early 2014. So these are all my individual trading days. On this day, I lost 50% of my count, shorting a momentum stock. Don't do that, guys. Not a good idea. And as you can see, the numbers have been bigger. I've had dozens of days where I've made or lost more than 100,000 or 150,000, as you can see. Well, thankfully, I had more gains than losses. But this is the cumulative chart. I haven't updated it this year, but the chart, I'm probably up in over 5 million now in lifetime profits. So I hit my first million in 2016. That was about, let's say, July or something, 2016. That's when I had made my first million. So about 5 years, July 2016. So about 5 years into my trading career. That's when I hit my first million. Then it took a few years to get to my second million. So from my second to my third and fourth, that was really quick. Because it's easier to make more money if you have more money, It's easier to make $1 million if you have 2 million than if you have 500,000. And this is the same chart, logarithmic chart. As you can see, I've had a lot of drawdowns. Like this was a 50% drawdown, or no, not this one. Where's my, wait, where is my, oh, here it is. Here are my drawdowns. So in 2014, I lost 35% in a day. It took me 10 days to make it back. This is for my day trading days. So I had much more volatility. Then in late 2014, I lost half of my account in a day, or actually in 8 days, but most of it was during one day. Took me about 4 months to get back. Then I had a bunch of 10, 14, 18% drawdowns. Again, I haven't updated it for this year, but here you can see the chart. The blue is how many days it took for me to get the drawdown, and the red day is how many days it took me to earn it back, like digging out of the hole. Let's see here. How long did it take you to earn? How did you do it? What process do you suggest for people who are this small? Well, when I had a 40K account, I was still day trading, but I started doing more overnights when I had like a couple of 100,000 or like 100,000, and then I started doing more swing trading, like 3 to 5 days when I had like a few 100,000. And now that I have millions, I usually, I don't even bother with these shorter term trades. I'm just looking for that because I don't really have to make money. Like, I don't care if I don't make money for the rest of the year. I just, I'm just waiting for the next big opportunity. Like when the market goes up a lot and I can make 1 million, 2 million in a short amount of time. The rest of the time, I don't sit there and day trade for a few thousand here, a few thousand there. I'm just getting too old for it. Like I don't want to spend the rest of my diet. Like I want to trade the rest of my life, but I don't want to day trade. I don't want to sit there and looking at charts, 7-8 hours per day. I've done that. It's really exhausting. So I'm just sitting around and doing other things. Meanwhile, I look for big opportunities. And the last big opportunities was late last year, early this year. I mean, I made it like, well over 1 million, very short time, in a few months. And I really didn't have to do it much. I bought a few stocks and then I just waited. And that's how I like to trade. I don't want to work too hard for it. Because you don't have to. If you wait for your setups, you don't have to work that hard. But you have to work hard to get to the point where you know where the good setups are, if you understand what I mean. Yeah, exactly. Patience is the hardest part. Because you feel like you have to do something. Every day I'm fighting the urge to trade. I'm a chronic overtrader. I probably always will be, and that's fine. As long as I realize it and don't go crazy with it. Let's see here. When did you stop shorting small caps? Well, I haven't stopped shorting small caps. There just haven't been much opportunity in that space this year. I mean, I shorted BIM, for example. Now, this wasn't a small cap, but it was behaving like a small cap. This thing I shorted several times. I went long too. Like stuff like, for those of you who don't know, I love shorting these kinds of stocks. They go up hundreds and hundreds of percent in 2, 3, 4 days. There's a lot of opportunity here. And this year there haven't been many. Like I talked about yesterday too, I just haven't been many. I don't know why. Yeah, like Plug a few years ago went from like 70 cents to 12 bucks. There's a lot of them. I can show you a bunch of these, maybe next week or something. I just have to prepare. I have a huge database in Evernote with thousands of charts. Like just like these kinds of stocks, I have hundreds of them from like 90s, from the 2000s, like 10, 15, 20, 30 years back. It's the same things repeating all over again. I could do like a session of just showing you some of my old trades and just some historical charts. The drawdowns, are they due to having a lot of positions stopping out, or they're just, well, early in my days when I was still day trading, when I had these huge drawdowns, pretty much all of these drawdowns were mostly shorting like one momentum stock. The problem is when you short these momentum stocks that go crazy, it's very easy to be too early. And that's when, it can hurt. It can hurt a lot. But nowadays, I haven't had any big individual losses, like really big ones where I lose like 5 or 10% of my account. I wouldn't be able to handle it. I was able to handle it like 3, 4, 5 years ago when I had a smaller account. But now I would just, I don't even know how I would feel if I lost like 10% of my account in one day shorting some momentum stock. I mean, that just, no. I couldn't be able to handle the volatility. Last time I was in a little bit of a trouble was when I shorted Tilray last year. I got in a bad loop I don't know why, but I started shorting way too early. I tried to short it like every day, and I was down 700,000 at one point. I made most of it back. Like I actually made all of it back when it finally crashed. And there were other ones like, what are the tickers, man? I don't even remember it. NBEV, yeah, this one. So I shorted this one, and all of them were crashing. So I made it all back, all those 700,000. But yeah, that was rough. But again, that was it took me several weeks to lose that money. So it wasn't like in one day. How do you? But yeah. So nowadays, most of my drawdowns are like if I have a lot of positions going, like say I have 10, 15 swings, and they all turn around at once. So most of my drawdowns now, they're from highs. Let's say I increase my account by 30%, and then I give it back a third of it. The worst kind of drawdowns is when you have already lost money for a while, or been going sideways for a while, like going sideways for months and months, and then you have big drawdown. That's really demoralizing. That's the worst kind of drawdown. The best kind of drawdown is when you've had it, things been going really, really well, and then you give some of it back. Like, let's give you an example. Like here, back in 2014, late 2014, when I lost half of my account in one day, I had been on a big run for the past 6 months or so. Meanwhile, here, I had a drawdown. Yeah, this is where I lost at 700k, I think. I had been going sideways for like 3-4 months, and then I had a big drawdown. Now that's demoralizing. That's really demoralizing. So there is a difference between a drawdown and a drawdown, in my opinion. Even if you lose the same amount of money, psychologically there's a huge difference. UXY is still holding up, and my tiny apps, which is probably, I don't know, like 0.5% of my total equity, is probably going to stop me out today. Let's see here. Yeah, not a lot of things on my scans, except my ETF scan, which is full of derivatives. Derivative ETFs, I don't even know what they are. Did I hear an alert going off? Tiva? This thing had news yesterday with ENDP and MNK, but I can't see the chart because TC2000 is so slow. Oh god, nothing is happening. What is this white line here? It's a trend line. Yeah, I can't get any charts right now. But I see UXY is going up. Now it's up 9%. Just now it was up like 7-8%. So that's great. If anyone else is using TC2000, can you load charts? Like I can't see any charts. Okay, now. Or are your platforms slow too? Let's see here. How do you start getting back after you experience a decent drawdown? I get scared to trade. Yeah, you get scared to trade. Absolutely. Yeah. I know a lot of people, they sometimes take a few days or even a few weeks off. I've never been like that. I've never taken trading. I haven't missed a day for the past 7 years, I think. I took a little bit of a vacation in 2013, but since then I haven't had a vacation. I haven't taken a day off from the markets. So I usually don't take time off after a drawdown, but you gotta take a step back, definitely, and refocus, reorganize. Trade smaller, trade less, until you need to start making small wins and gain your confidence back. Scale down size, scale down the amount of trades, and do less with less size, and then you start building confidence again with small wins. What percentage of your account are your position sizes usually? Well, I would say generally between 5 and 15. They can be less and they can be more, but most of my positions are 5 to 15% of my account. Like this UVXY, let's see, so this is about a little bit less, I would say maybe 15% or so, maybe a bit less. Now I wish I'd bought more because it's going up, but it's always like that. You never own enough when they work, right? All right, so your TC2000s are working. Okay, that's great, that's great. Well, I guess there's not really much to do rest of the day. I'm just gonna watch this TC2000 and maybe add to it. Nah, probably not. It's up too much. No, I'm not gonna add to it. Oh yeah, this TU alert went off. Okay, there's nothing here. So I'm gonna cut the stream, and I'll be streaming tomorrow again, the same time. I'm gonna try to be a little bit earlier tomorrow. Maybe start streaming like half an hour or 20 minutes before the market opens. But that's my goal, to stream about an hour or hour and a half per day, because most things usually happen, like first hour, an hour and a half anyways. So even for me, as a swing trader and position trader, and the other things that happen the rest of the day, I can just go through them like before the market open the next day, and that would be a great exercise for me too, to analyze my own mistakes and see what I did right and see what I did wrong, and analyze my own thought process. So I think it's gonna be great. Okay, thank you very much, everyone.